Hi everyone. Welcome to Level Up Dividends channel. The payout ratio is a financial metric that measures the proportion of earnings a company distributes to its shareholders in the form of dividends. It is calculated by dividing the dividends per share by the earnings per share. The payout ratio is important for stock picking for several reasons. 1. Dividend stability. A company with a consistent and stable payout ratio indicates a reliable dividend payment history. Investors seeking regular income from dividends may prefer companies with a stable payout ratio, as it suggests that the company is committed to returning a portion of its earnings to shareholders. 2. Dividend growth potential. While a stable payout ratio is important, investors also look for companies with the potential to increase dividends over time. A low payout ratio indicates that a company retains a larger portion of its earnings for reinvestment or future growth. Such companies may have more room to increase dividends in the future, which can be attractive to income-focused investors. 3. Financial health. Analyzing the payout ratio in conjunction with other financial indicators can provide insights into a company's financial health. A very high payout ratio could suggest that a company is paying out more in dividends than it can afford, which may not be sustainable in the long run. Conversely, a very low payout ratio may indicate that a company is not effectively utilizing its earnings to reward shareholders. 4. Sector comparison. The payout ratio can be useful for comparing companies within the same industry or sector. Some industries traditionally have higher payout ratios due to their stable cash flows and mature nature, such as utilities or consumer staples. In contrast, companies in growth sectors like technology may have lower payout ratios as they reinvest a larger portion of their earnings back into the business. It's important to remember that the payout ratio shouldn't be analyzed separately. When making investing selections, it should be taken into account together with other fundamental and qualitative aspects. To have a thorough knowledge of the company's investment potential, it's also crucial to examine its general financial stability, profitability, growth possibilities, and management's capital allocation plan. In today's video, I'd like to share with you 16 Dividend King stocks that have a very low payout ratio, around 30% or lower. You will see that the majority of the stocks I present have an interesting upside potential. So if you buy them now, you will not only get good and sustainable dividends but also profit from their price appreciation. You can't get better. Now, let's get into the list. Stock 1, Nucor. Dividend yield, 1.28%. Dividend safety, 90. Payout ratio, 12%. Dividend growth, 6% per year in the last 5 years. Dividend growth streak, 50 years. According to analysts, the stock price could get to $209, that is a 24% price appreciation. Not too bad. Stock 2, Stepan Company. Dividend yield, 1.75%. Dividend safety, 99. Payout ratio, 46%. Dividend growth, 10% per year in the last 5 years. Dividend growth streak, 57 years. According to analysts, the stock could reach $104, which represents an upside potential of 21%. Stock 3, Commercial Bancshares. Dividend yield, 1.97%. Dividend safety, 99. Payout ratio, 31%. Dividend growth, 8% per year in the last 5 years. Dividend growth streak, 56 years. According to analysts, the stock could reach $57, which represents an upside potential of 4%. Stock 4, National Fuel Gas. Dividend yield, 3.58%. Dividend safety, 95. Payout ratio, 40%. Dividend growth, 3% per year in the last 5 years. Dividend growth streak, 122 years. According to analysts, the stock could reach $69, which represents an upside potential of 24%. Stock 5, Nordson Corporation. Dividend yield, 1.16%. Dividend safety, 94. Payout ratio, 28%. Dividend growth, 14% per year in the last 5 years. Dividend growth streak, 61 years. According to analysts, the stock could reach $280, which represents an upside potential of 20%. Stock 6, Lowe's. Dividend yield, 2.04%. Dividend safety, 93. Payout ratio, 35%. Dividend growth, 20% per year in the last 5 years. Dividend growth streak, 63 years. According to analysts, the stock could reach $254, which represents an upside potential of 18%. Stock 7, S&P Global. Dividend yield, 0.84%. Dividend safety, 99. Payout ratio, 26%. Dividend growth, 15% per year in the last 5 years. Dividend growth streak, 50 years. According to analysts, the stock could reach $491, which represents an upside potential of 14%. Stock 8, ABM Industries Incorporated. Dividend yield, 1.94%. Dividend safety, 61. Payout ratio, 27%. Dividend growth, 3% per year in the last 5 years. Dividend growth streak, 56 years. The stock has a PE ratio lower than its peers, which suggests it could be cheaper than its intrinsic value. Stock 9, Farmers and Merchants Bancorp. Dividend yield, 1.75%. Dividend safety, 81. Payout ratio, 15%. Dividend growth, 4% per year in the last 5 years. Dividend growth streak, 61 years. The stock seems to be trading at its fair value. I think it's a good bargain to buy it at this price, as it offers an interesting dividend yield. Stock 10, Tennant Company. Dividend yield, 1.10%. Dividend safety, 71. Payout ratio, 17%. Dividend growth, 4% per year in the last 5 years. Dividend growth streak, 52 years. According to analysts, the stock could reach $145, which represents an upside potential of 43%. Stock 11, H.B. Fuller. Dividend yield, 1.14%. Dividend safety, 70. Payout ratio, 22%. Dividend growth, 5% per year in the last 5 years. Dividend growth streak, 53 years. According to analysts, the stock could reach $95, which represents an upside potential of 22%. Stock 12, Dover. Dividend yield, 1.11%. Dividend safety, 89. Payout ratio, 22%. Dividend growth, 2% per year in the last 5 years. Dividend growth streak, 68 years. According to analysts, the stock could reach $194, which represents an upside potential of 6%. Stock 13, Parker Hannifin. Dividend yield, 1.24%. Dividend safety, 94. Payout ratio, 25%. Dividend growth, 11% per year in the last 5 years. Dividend growth streak, 67 years. The stock seems to be slightly overvalued. It could be better to wait a price correction before buying any shares. Stock 14, Archer Daniels Midland. Dividend yield, 3.28%. Dividend safety, 94. Payout ratio, 37%. Dividend growth, 5% per year in the last 5 years. Dividend growth streak, 93 years. According to analysts, the stock could reach $63, which represents an upside potential of 3%. Stock 15, MSA Safety Incorporated. Dividend yield, 1.12%. Dividend safety, 99. Payout ratio, 26%. Dividend growth, 6% per year in the last 5 years. Dividend growth streak, 57 years. According to analysts, the stock could reach $197, which represents an upside potential of 8%. Stock 16, W.W. Grainger. Dividend yield, 0.87%. Dividend safety, 99. Payout ratio, 20%. Dividend growth, 6% per year in the last 5 years. Dividend growth streak, 52 years. The stock seems to be slightly overvalued. It could be better to wait a price correction before buying any shares. This is it. Remember, I am not a financial advisor. Don't forget to make your own due diligence before investing. I hope the list helps add some companies to your watch list and maybe portfolio. Please push the like button if you like the video and subscribe to the channel for similar content. I'll see you next time.